Wow, I'm almost done with all of the with going over, except for one question I didn't really go over there. We just did. We just successfully finished exercise 720. We are now going to do exercise 7.21. So, oh no, it's one of those. It's one of those blah questions. This is all the stuff from the first several questions. I mean, surely our professor pretty much just made the test based on. I mean, he basically just made up his own test, right? He probably took a bunch of questions from, like, the test. What stuff. Jones is planning to factor some accounts receivable at the end of the year. Accounts totaling $25,000. Okay, but how does that have anything to do with the previous question? Credit factors will retain 5% of the balances for probable adjustments and assesses a finance charge of 4%. Did we even do that? Okay, prepare a journal entry to record the sale of receivables. So, accounts receivable to be sold is $25,000. Due from factor equals 0.05 times this. Finance charge is 4% of this. Hey. Okay, that's information. Fair recourse liability is $1,200. That's information. That's all the information we need to solve the question. So the accounts. So what will happen is their accounts receivable will decrease, but first of all, they will receive money because they will receive money. They will receive a cash payment for the receivables. Whoa, that was fun. What is the second thing that will happen, everybody? Dang it. I think they record due from factor. I need to take a screenshot of something because, hey, this is a screenshot because I don't care about this guy because we haven't even done that in a homework question. So we're just going to take a picture of this part. Unfortunately, we can't use it for our test because it's not open book / open notes. I wish it was open notes. This is not open notes. Basically, the reason I need to do this is just simply because I don't remember how to exactly do this. Sale of accounts receivable. A factor. So basically, due from factor is basically an accounts receivable, and a loss on the sale of receivables is basically something that decreases revenue. So those are all three of those are debited. Accounts receivables, the amount that you sold, and recourse liability is recourse liability. That was funny. And how do you calculate loss on sale of receivables? They do it in a very stupid way. It's the finance. It should be just the finance charge plus what? What? It's the recourse liability. The finance charge plus the recourse liability. Right? That's it. That's what it is. Due from factor loss on. No, I closed it already. Loss on sale of receivables. And then accounts receivable and recourse liability. And so we know due from factor is 1250. Now this is going to be equal to this plus this, and accounts receivable will be the 25,000. Recourse liability is 1200. Oh no, I totally screwed up. These two are over here. Is there an easier way to calculate the cash amount? How did they calculate cash? Is there any particular way that they calculate it? You just gotta like do crap. Oh. There's a particular way that they calculated it. What was it? Where's the amount? It's this minus this. It's minus the finance charge minus the due from factor. Like this is just going to be equal to this minus the finance charge minus due from factor, and that should be it. The cash is the amount sold minus finance charge and minus due from factor. So there. Is that it? Record the energy. Did I do the accounts receivable turnover thingy? B. There is, yes, I did. Well, I didn't. The teacher did it because I didn't have time to do it myself. I didn't give myself time to do it myself. So what? Accounts receivable turnover. Okay, so we already know that they're... So, ending accounts receivable for before was 45,000, but now it's actually not. It equals 45,000 minus 25,000. Their ending accounts receivable is this. So, average net accounts is equal to 15 plus 20 divided by 2. So therefore, I bet this is going to be wrong. Wait. Oh, jeez. Accounts receivable turnover. Now that is going to be equal to, I forgot, net sales divided by average net accounts receivable. Please just be right. Now this is confusing. This is so confusing. What is going on right now? What is going on? Dude, they actually calculate... Okay, the loss was 2200. Wait, what? Wait. Yeah, the way they calculated the loss was completely messed up. Also, we didn't do Part B. We never did Part B, weirdly enough. The professor... All we did was calculate the loss on the sale of receivables. We didn't even do the journal entry in class. Okay, let's see. We have cash received is equal to 22,750, correct. Due from factors, 1250. Loss in sale receivables is 2,200. Okay, so yeah, that's all we did. That's all I have written down, and there's nothing else. So I really hope I did this part right. I have no idea if I did or not. Great. Anyways, we're apparently done with all of our in-class problems. Somehow. We have completely gone through every single in-class problem except for like one of them or something. But now I have to go through, well, my other stuff. So, oh my gosh. We're going to... How about this one? Okay, practice chapter 4. Ooh, that's a lot of practice questions. That was funny. Man, what is this gonna entail? What is gonna be on this exam? Is this gonna help me? Well, that's fun. I guess we're just gonna know already what the answer is gonna be. Let's see here. I mean, these types of questions, I would just use my phone calculator. I guess. So, well, that's very easy. All you have to do how do you exit from the TVM solver? I don't even know. How do you exit from the TVM solver? Second quit, probably. There you go. 11,720,000 minus 370,000 minus 175. Now, what is freight out? Oh, come on. Freight out isn't included. That's not included in the calculation. $111,750,000. So I was correct. Subtract the sales returns and allowances and the sales discounts from gross billings. That's exactly what I did. Ashton is an investor looking at... Oh, weird. Why isn't this one showing me the answer? Ashton is an investor looking at the income statements of two different companies. The first company has a very detailed income statement, and the second company has a very condensed income statement. They will invest in company 1. I don't even remember that question. All income statements should provide information about revenues, expenses, gains, and losses. However, income statements that provide more detail by separating out types of revenues, categories of expenses, and specific reasons for gains and losses will provide more information to investors and allow them to more easily predict future cash flows. It's hilarious. I think some of these questions weren't even asked the first time around. When a company makes a change to an accounting principle, including when the new GAAP are made, the company should make a retrospective adjustment to previous year's financial statements so that the statements can be directly compared to the current year's financial statements that use the new accounting principle. Preparing with regard to comprehensive income, With regard to comprehensive income, how does net income differ? In one statement, I mean, that's gotta be right. Yes. Traditional net income under one statement approach is a subtotal which varying net income as a subtotal on the statement is a disadvantage. Reporting, why is the grammar so bad? Reporting comprehensive income in a separate statement indicates that the gains and losses identified as other comprehensive income have the same status as traditional gains and losses. Wait, how does that even work? What? Jacob is a manager for Guzman Enterprises. If he wanted to decrease the current annual net income, you know what's so great about these assignments? The online assignments cover more topics in the textbook than is covered in our actual class. Wait, but this is still from 4.1. It's decrease the current annual net income. Wow. Is this going to be a test question? Nice. decrease annual net income. Okay. Because, oh my goodness. Why? Please show this on the test. Well, it should be a simple question. But why is this even a question? If you purchase from suppliers, that means that your expenses will go up. So if you do not, then your income, okay, so that means you can make more sales. No, pay suppliers all amounts. Oh, that doesn't do anything because you already owe them the amounts. All that does is affect your cash and liability. So it must be the last one. Oh, jeez. And why is that the case? Think about it. If you delay shipments and sales to customers, because theoretically you would make profit off of those sales, but if you do not make the sales yet, then you have not made the profit. Oh. You know what? This is a terrible idea, but I'm just going to only do one thing here. I'm only going to do one thing to prepare for this. One more thing, which is to do that one question that I was very unsure of, and that's it. I'm probably going to fail as a result of this, but I can't do anything else for some reason. The one thing that took me a million years and it took me 3 attempts to get it done. I will look at that question. This is the question where I have no idea how to do this. Wait, what? Yes, this is correct. Wait. I thought there was way more to this question. There's supposed to be way more to this question than is shown here. I guess there must be 2 questions that are similar to this one. Information. Alright, I'm going to do this question. Basically, so, because question 2, chapter 4 assessment. We have stock outstanding. We have some stuff that occurred. What is the earnings per share? So this is basically that one question that we did in class that I did not write down how to do the question because I just was an idiot. So I will now do the question. How to compute income from continuing operations before taxes. They already told us that. 24, 453, 100. because 24,453. Now we have to calculate what taxes are levied. Tax rate is 35%. So 0.35. So income from continue. Let's spell continue. So income equals this minus this. That was funny. So now, earnings per share. So net income minus preferred dividends. So we now know what is preferred dividends. Preferred dividends declared 1,081,170. 1,081. 1,081,170. So EPS, income from continuing operations. So you do net income this minus preferred dividends, and then you divide it by the number of common shares outstanding. I should have just written that down somewhere. Crap. Common shares outstanding is 4,062,980. So this equals divided by this. So we got 4. Well, we have to do that. 3.65. So there we go. 3.65. Good job. I did that correctly. Next step. What's the next step? Discontinued operations. Loss from discontinued operations. Three 3,319 800. So tax loss from discontinued operations equals this minus this, and then we have Do we still do the subtraction thing, though? Because it's a loss. We should still do the subtraction thing. We would do EPS discontinued. This should equal. It's literally a loss. It should be negative. It should be negative this minus this divided by this. I got that. I got 0.80. What is going on here? How do you calculate this thing? Okay, thank goodness there's a solution here. What is going on with the solution? The reason so what they do is they don't even consider preferred dividends in the calculation for that one. Why don't they do that? Why don't they consider the preferred dividends? Oh. So the reason I kept getting it wrong was because they don't include preferred dividends in the calculation for discontinued operations. I have no idea why. So that's why I kept getting the question wrong. The only reason I ended up getting it right in the end is because I was able to calculate this number, and then the way I calculated this number was I did this minus this equals this. Oh my gosh. But anyways, apparently what they want you to do is just this divided by this. So and then I mean, it should be pretty straightforward to calculate the. I mean, you could just do this minus this, but whatever. I see there. Now, there was one more question where it was kind of like that. It must have been this one. This was basically the other question that had the exact same issue. This was like the same exact type of question. So the problem is, the thing I wasn't getting was that when you do the loss on the operation thing, hey, wait a minute, they didn't even do this part. They didn't do the EPS. Okay, so how on earth did I get these right? Oh, good job, Solution. You didn't do the part where that I was struggling with the most. Weirdly. Okay, I remember doing this. It was so incredibly complicated. But it screwed my life. So I just love screwing myself over by not studying enough for a test. I'm going to do the Duo thingamajig, but I can't do it on camera anyways because it's sensitive information. There's like a few things I need to study before the test starts, but I can't open my computer up before the test because the test is in a computer lab, so I won't be using my computer during the test. I'll be using a school computer. So firstly, I need to... That was awesome. I need to put all these pictures on my phone, I guess, because I'll just be looking at it on my phone instead of on stuff. Or I could just print this stuff off. But I see a pile of junk sitting in front of my printer, so I'm not going to.